Welcome to The Explainer. All right, today we're going to break down the key takeaways from FICO's fourth quarter 2025 earnings call, and we're going to focus just on what the CFO had to say. So let's get right into it.
Here's how we're going to tackle this. First, we'll look at the big picture results. Then we're going to drill down into their two main business segments. And finally, we'll zoom back out to see what it all means for the bottom line, and for investors, of course.
So right out of the gate, FICO put up a really strong quarter. They beat expectations, and that really set a positive tone for the year ahead.
Let's start with the top line. The company pulled in total revenues of $516 million for the quarter, a very solid number.
And that number represents a 14% increase compared to the same time last year. In this economy, that's some really healthy growth.
But here's where it gets really interesting. Where did that success actually come from? Well, a massive chunk of it, $312 million to be exact, came from their famous scores business. And that really leads us to the main story of the quarter.
The real story this quarter is, well, it's kind of like a tale of two very different segments inside FICO. The performance difference between them is pretty dramatic.
And this slide just lays it all out, crystal clear. The scores business, its revenue grew a staggering 25% year over year. I mean, wow. At the same time, the software segment was completely flat, 0%. So you got to ask, where did that incredible 25% growth come from? Well, if you look at this chart of their business-to-business revenue, one of these things is not like the others. That bar from mortgage just towers over everything else.
Yeah, you're seeing that right. Revenue from mortgage originations was up an incredible 52% from last year. It was the undisputed powerhouse for FICO this quarter. Just amazing.
Okay, so let's switch gears and talk about the software segment. Now, on the surface, 0% growth. That looks kind of stagnant, right? But believe me, there is a really important strategic shift happening just under the hood.
So even though overall growth was flat, the company is placing a huge bet on its future in one specific area, what they call the FICO platform.
And you can already see this big pivot showing up in the numbers. Their new platform now makes up 35% of all their recurring software revenue. And you can bet that slice of the pie is only going to get bigger.
And here's the proof that the strategy is working. The new platform, which is basically their next-gen software, is absolutely thriving with a net retention rate of 112%. Now, what that means is they're not just keeping platform customers, they're actually expanding their business with them. Meanwhile, the older products are seeing a slight dip, which is exactly what you'd expect to see.
And if you want a little glimpse into the future, this is it. New sales bookings just hit a 6-year high. That's a huge signal that software revenue growth is probably about to kick into a much higher gear. So you've got one segment that's just booming and another that's retooling for some serious growth. The question is, how does all this translate into financial strength and, maybe more importantly, returns for investors?
Well, for one thing, FICO is an absolute cash-generating machine. We're talking $739 million in free cash flow over the last year alone, and that's up a whopping 22% from the year before.
And the company, and the CFO specifically, has a very clear philosophy about what to do with all that cash.
They returned a record $1.41 billion to shareholders through stock buybacks. Think about that. That's the highest annual level in the company's entire history. For investors, this is the ultimate takeaway.
So, the numbers this quarter tell a really compelling story. You've got this legacy business that's providing all the fuel for a really smart strategic pivot. And that leaves us with one final big question. Is this powerful combination setting a whole new baseline for FICO's future growth?